Hello, everyone, and welcome to our training today. So Amazon just rolled out last week a brand new credit line for sellers on their platform. And it really made me realize that we've never dove into this topic before. So today we're talking about inventory financing, especially for e-commerce businesses. We're going to talk about a lot of different ways you can actually get the money to successfully run an e-commerce business and buy the things that you're selling without coming out of pocket without the cash. There's a lot of creative ways to do this. So by the end of this training, you're going to know, 10, 15 ways or more that you can actually get money for an e-commerce business. Some we've talked about before, some we've never talked about before that are specific to platforms like Amazon that you can use to get the inventory you need and the other resources that you need to buy to be able to succeed online in the e-commerce space. So for those that don't know me, my name is Ty Crandall. I'm CEO here at Credit Suite. And at Credit Suite, this is what we do. We help business owners get capital. So we help you improve your fundability, fix the things that lenders and credit issuers look at to make you more fundable, to help you get more money at better terms. We also can help you build your business credit for your EIN that's not linked to your personal social. You can get credit without a personal guarantee, without a personal credit check, and do it even as a startup. And we help you access all forms of capital in one place, all different kinds of loans and credit lines that you're able to access in one place. So if we can help you along the way, give us a ring, 877-600-2487, or you can get approved directly online at creditsuite.com/get funding. So look, online business, if this is where you are, well, it's obviously booming right now. So according to 2018 poll, about 2/3 of all adults bought something online. But in March of 2020, due to COVID-19, a good 42% of Americans bought groceries online at least once per week. So the reason I say this is that, look, a lot of things are changing. And a lot of people that weren't online before are online now. And I've said this, especially with COVID-19, you have a lot of people that are even in older generations that really weren't used to buying things online and still like to go in the store that now have an element of fear to do so. And that's pushed a lot of people online. I use a service called Shipt to get my groceries delivered. I've used it for years. Now the whole system got strained because everybody started using it. So again, it's interesting because those of us that have used online services are now finding it a little bit harder to do because more and more people are jumping into the space. More people are ordering online than ever before. So orders for grocery from Amazon increased 50-fold, for example, through COVID-19, which is why I think this topic is very timely. Now, Statisha says about 227 million Americans are buying online in 2020. So with 330 million American citizens, that's just under 69% of all Americans. So about 70% of Americans are buying things online. And again, what's interesting is that post-COVID-19, we could see that number climb even higher than this, around about 70%. And they're buying a lot more than groceries online as well. They're buying many of the things that they normally buy. Amazon's even got into the clothing business where you can buy clothes on their website and you don't even have to buy them. You could get them, you could try them on, see if you like them, send back what you don't want, and then only keep what you do. So we're seeing more and more of these purchases take place online. According to Investopedia, inventory financing is a revolving line of credit or a short-term loan that's acquired by a company so it can purchase products for sale later. The products serve as the collateral for the loan. So here's what I find is that I say this a lot in my trainings is that business owners make a huge mistake when it comes to getting money. They try to get one loan or one credit line and use it for all purposes. And the problem with that is that the majority of us, we need a lot of money. And if we only get one loan or one line and try to use it for everything we need, it's usually not enough. And that means that then we start to try to apply for a higher line amount, a higher loan amount. But the higher the line, the higher the loan, the harder it is to get. And so one of the best strategies you have of getting money to your business is get financing for things you can specifically use it for, and then use your what we call working capital lines of credit loans. And working capital just means you can use it for any purpose. Use your working capital lines of credit and loans for the things that like you can't use specific kind of financing for. So an example of that is you wouldn't want to use a credit line to buy real estate when you can get a commercial real estate loan, right? You wouldn't want to use the cash in the bank to buy a big piece of equipment when you can get equipment financing for that. Same thing applies for inventory financing. You can get money a lot of different ways for the purpose of buying your inventory. So if you're selling in an e-commerce business, then the nice thing about that is that you're able to come in and get the inventory you're actually selling. And some of these options we're going to talk about today, you don't even have to pay them back until you've sold whatever it is that you bought. So a lot of benefits here. You don't want to get buried in your cost of your inventory when you can leverage that inventory and get a credit line to buy the inventory, or leverage a credit line, the credit or the inventory you already have, to get a credit line to borrow against to free up some working capital. So Caesar says, hello from New York. Welcome. Thanks for coming in. Rebecca from YouTube got in late. This video will be emailed to participants. It's not because you're attending on YouTube. You're attending on a live. I don't have your email address, but if you're attending on YouTube, it will be available. You will be able to restart it from the beginning. And good morning, Eric from YouTube. Thanks for coming in. So inventory financing is something we're going to really talk about today. So why can this work? Well, online businesses are relatively doing pretty well right now. You already have experience with doing all of the commerce online. And with so much of our commerce going online, e-commerce businesses can continue to do well, especially if you're thriving in this environment. It's interesting because I talked to a lot of people in a lot of industries, and the ones that have already made the move to online are talking about the ones that haven't and how they'll fail. And just yesterday on our podcast, the Business Credit Financing Show, had a great guest on that's talking about making education affordable and obtainable for a lot of people, especially working adults. And this is interesting to look at even our education system, and will colleges really be able to survive, long term with these hundreds of acres and all these buildings that they maintain when so many other schools are taking their education online? I can go on and on and on, but COVID-19 has shown us that a lot of industries can thrive online, even ones that we didn't once think could. Okay, so inventory financing. Use your existing inventory as collateral for business financing. That's really ultimately what we're doing with inventory financing. Now, you'll need inventory for this kind of product. There's only one lender in the whole country that does this product. And for this product, you need to have inventory of $500,000 or more to qualify. If you don't worry. I'm going to talk about other options where you need way less than that, or you're just getting started. But for this one, you can get approved for as much as 50% of the value of your inventory. So if you already have existing inventory, you could turn that into a credit line and then get a credit line against that inventory being serving as collateral, and then get approved for a credit line as much as 50% of that inventory. Now, rates will vary depending on risk. 5 to 15% is the typical range, and you can usually get funding in about 3 weeks or less. So risk is determined in large part with inventory financing based on how well you manage your inventory. It's that simple. Look, if you're going to use an asset for any kind of collateral-based financing, how you manage that asset is what matters most. For example, if you have account receivables and other people pay you on terms, your ability to manage and show your account receivables, to show your aged receivables, makes the difference when it comes to getting financing using that asset. Same thing with inventory financing. What they're going to want to see is that you have a good inventory management system, that you know when inventory is being sold, that you know when it comes time to get it, that you can actually keep track of that inventory. Because if you're going to use that as collateral, well, they're going to want to make sure that you have your eye on the ball and that you're keeping a close eye on your actual inventory. And Arnolfo says, do you help a startup business from scratch? Yeah, absolutely. If you get in touch with us on our phone numbers on the bottom of a lot of these slides, we can help you. We even have a startup course that we just released. It's in its beta test. It's not even available online. Our team can tell you about it. That teaches you everything you need to know to start and grow a business. It's called the Startup Accelerator. So just give us a ring. Our number's on the bottom of all of our slides. And Dell says, hey, from Long Island, New York. What's up, Dell? It's nice to meet you. And Pineapple says, yes, a lot will change online. A lot already is changing post-COVID-19. So again, inventory financing is something that works really, really well. We're not talking about lumping together a bunch of small PCs and saying that you have inventory. We're talking about companies that really have inventory on the shelves. Now, there may be restrictions on the type of inventory you can use. So for example, cannabis, alcohol, firearms, perishables don't usually work for inventory financing. Okay, those kind of things, for obvious reasons, really won't work to be able as collateral to get financing again. And there can be some revenue requirements, but typically there's not. And there might be some FICO requirements, but typically there's not. I call this the 3C formula: cash flow, credit, and collateral. Those are the 3 C's. If you have one, you don't need the other 2. In this case, if you have collateral, then they're not going to really care much about your revenue or your credit, because you've got the collateral, which means if you ever default, they just come and take the collateral back instead of actually coming after anything else. That's what they go after first. So what a reason I'm saying this is that if you have a strength, whether it be credit, cash flow, or collateral, you can use that strength to get money. In this case, the strength is the collateral or the inventory. So credit and cash flow don't really make a big difference. Now, what if inventory financing is impossible to get for you right now? What if you don't have $500,000 in inventory? Well, then there's a lot of different ways that you can use other assets as collateral as well. And I talk about this sometimes, but I want to at least visit some options that you can use other assets as collateral before we get into some cool ways that you can get other kind of inventory financing, including some very specific kind of financing that's even available for Amazon sellers. So you can tap into these kind of assets, a 401k, account receivable, stocks or bonds. These are the most common kind of assets that are used as collateral for collateral-based financing. So even if you don't have inventory, you might be able to tap into these assets for yourself or for somebody else. And we'll talk about that in just a minute, because there's different ways you could tap into these kind of assets. So security-based lending, something I talk about where you're able to use stocks and bonds as leverage and borrow as much as 90% of the value of those stocks and bonds and get an interest rate, a credit line as low as 5% interest. And here's the cool thing. You still earn interest on the stocks. And I'll tell you why I love this program, because 75% of business owners get money from family and friends. I talk about this a lot. Well, look, if I'm going to go to my dad and get money, it's harder for me to get cash from him than it is to say, Dad, will you leverage one of your stocks? Let me get a credit line for a certain value of your stock. And then what I can do is I can then use that. It doesn't hurt you. You still earn interest. You don't have to give me the cash. And the only way you'd be hurt is if I don't pay back the credit line. And you and I can figure out a way that you know that this credit line is getting paid back. The only reason I say this is that if 75% of the people Americans are getting money from family and friends to start businesses, man, it's just a lot easier to tap into somebody's asset and have them leverage that as collateral than then give me the cash. Could they be burned if you default? Yeah. But guess what? If Dad gave me 50 grand in cash, he's still burned for the 50 grand. If he gives me a credit line for $50,000 against his stock, then he didn't have to give me the cash. He still earns interest on the stock. He doesn't lose anything unless I default. If he gave me the 50 grand in cash, he's out that 50 grand in the short term. He's not earning interest on it, et cetera. Bottom line is, this is just a creative way to get money from other people that might have an interest in investing in your business beyond using your own stocks and bonds, okay? So again, interest rates as low as 1.6%, but typically about 5% on credit lines. Now, another way that I talk about once in a while is 401k financing, where you can use 401ks or IRAs as collateral to be able to get financing. You can borrow as much as 100% against the value of the 401k IRA. There's no tax penalties whatsoever. Get a working capital loan or credit line for as little as 5%. When we see partners come together to start businesses, this is the number one way that I've seen that they do it. When they come in and they're contributing money, the number one way we've seen is that people come together and they use 401k financing to tap into their 401ks to partner in businesses. So again, another creative way to get financing that I think can provide a bunch of steps, a bunch of value to you. And you basically are just setting up a new 401k where you're investing in your own company instead of other people's companies. Does that make sense? Should you tap into a 401k? There's all kinds of people that will tell you different things. The way I look at it is a 401k, you're investing in other people's businesses. If you're doing this, you're taking the money and deciding to invest it in your own business. So a lot has to be said with your own comfortability of success in a potential success in your own business. Okay, and let me see here. Okay, Pineapple just checking the comments. All right, so that being said, that is basically how 401k financing works. And I talked about this one a little bit, account receivable financing. This is the number one kind of SBA financing that's out there. I shouldn't say SBA financing. What I mean is if somebody goes to get an SBA loan, then the number one form of collateral they use, whether it's to buy a business or to be able to get money for their existing business, is account receivables. An account receivable is simply when a customer pays you on terms. So if we sell our business credit builder for $3,000 and you pay us 7 payments of $597, then we're letting you pay on terms, and that could be used as an asset, and then we can borrow against that to get financing. And it's pretty cool because we can get financing as low as 1.33%. The lowest interest that you're going to see that I found is on this program. You can now borrow as much as 90%. A lot of sources are still 80, but as much as 90% of the value of that account receivable. And again, you're basically just selling your future receivables. So it's a great way to not have to wait months to get paid and to get that cash in the door much, much, much faster. Now, the receivables have to be from the government or from another business. They can't come from individuals. But as long as that's the case, then you can qualify. Credit doesn't really matter. And cash flow doesn't matter. All that matters is that you have that asset, so that can work for you well. So I've talked about some of those options before, but let's talk about some things I never really talked about before, because this is why I wanted to do this presentation today. Is I realized there's a lot of, when Amazon came out with this credit line, I thought, man, there's all kinds of financing for Amazon sellers and for a lot of other sellers that we don't really talk about. So let's dive into some of that. So Amazon has a corporate card and corporate credit line that you can get. Now let's talk about business credit versus corporate credit, because I misrepresent business credit a lot, because I think I use business credit because people understand the terminology business credit. But in reality, what I'm typically talking about is corporate credit. And here's the difference. A business credit card can be issued to you, but you provided your social security number, you provided a credit check, you provided a guarantee. A corporate credit card or line, by definition, what it is it's for the corporation. It's no guarantee, it's no credit. No credit check. So when we talk about corporate credit, we're talking about money you can get from Amazon without a personal credit check and without a personal guarantee. Okay, so a lot of people don't know this, but Amazon offers a great corporate credit line. This is not new. It's been around. And you can get a revolving, or you can get what's called like a net 55 or net 30 type term from Amazon. Now, you can get multiple borrowers on the single account, which works really great for people that if you have multiple users in your company that need access to credit. You can download your history reports. You could pay by purchase orders. A lot of cool things that you're able to do with this corporate credit card. Now, you can get net 55-day terms, as I mentioned. You can also set up a primary and secondary accounts for multiple users, and even get a dedicated account manager with them. They have a revolving credit line where you can make minimum payments or make the payment in full, about 13% plus interest to give you an idea of the average interest rate. And you can apply as a personal guarantor, or you can apply without a personal guarantee. So look, when it comes to building corporate credit, Amazon's one of the first accounts a lot of our clients get. And it's one of the ones where they're getting $10,000, $20,000, $30,000 limits. This is a fairly easy account to get approved for with again, $10,000, $20,000, $30,000 limits. You don't even have to be doing a lot of business on Amazon or selling products on Amazon to get it. Even if you're not selling on Amazon products, you can still get this corporate credit card, and you can use it on Amazon's products. So again, I don't know about you, but I buy a ton of stuff on Amazon, like a lot of stuff. It's crazy how much stuff I buy on Amazon. So this really is a big difference, because if you're buying stuff for your business on Amazon, you can use this card to be able to do so. And if you've built some business credit, 5+ accounts on your business credit reports, then you're able to get this credit card without a personal guarantee and without a personal credit check. How many accounts you have on your business credit reports determines if you'll be on the revolving side, like I showed you, or that net 55, which means you'd have to pay back your balance in its entirety in 55 days. Either one's beneficial, right? If I get credit I can use with Amazon and not pay back in 2 months, that's beneficial. If I could pay back a minimum payment over months or years, that's beneficial. Either one could work really well if you're buying things on Amazon. Again, you do not need for the corporate credit card to be able to selling on Amazon. This is a card you can use to buy stuff on Amazon. And again, you could provide a guarantee and get it quickly, or you could build some initial business credit and get it without a personal guarantee and without a personal credit check. So you definitely have some options there. Now, Skip's tuning in, and Skip says, nothing is more constant as change. The Credit Suite team will help you cutting edge, up to date on all of them. Then they coach you throughout how to best put Intel to work for your company on start. I appreciate that. Thank you very much, Skip. Skip's somebody that's obtained hundreds of thousands of dollars using our system to build business credit. And more than likely, Skip's got the Amazon corporate credit card as well, as most of our clients actually do. Rika, hey there. Thanks for tuning in. Now, here's why I wanted to do this whole thing today, because last week, Amazon rolled out a brand new credit line. If you're selling products on Amazon, you need to know about this thing, because this thing's about to hit your central account. And I want to give you the details. So first of all, it's backed by Goldman Sachs. Now, for those that don't know, Amazon has a unique relationship with Goldman Sachs. Goldman Sachs backed the $13+ billion acquisition of Whole Foods by Amazon. So they built a relationship. Amazon for a long time talked about a marketplace for their sellers to be able to access capital. They ended up going in and giving the contract to one source, which is Goldman Sachs, and they're offering this through their Marcus brand. Now, you can get approved for up to $1 million with this credit line, and how much you get approved for is based on how long you've been selling on Amazon and how much you're selling on Amazon. They're going to look at some other factors, including credit, but those are the main two determining factors they're going to look at. Interest rates of 6.99 to 20.99 based on risk. When they look at things like how long you've been selling, how much you've been selling, they're going to look at credit, those type of things. Those will help determine the actual interest. Now, other fees are going to apply. We don't know about them yet because this is brand new, but they've mentioned a maintenance fee if you're not using 30% or more of the credit line. So it gives you some kind of idea of what to potentially expect when we do see the fees roll out. And if your business is eligible, you're going to see this in what's called Seller Central, which is where Amazon's sellers is kind of their own little place and their back office. Let's say it's Amazon's back office for their sellers. So Seller Central is where this offer will become available, and you can get access to funds within 5 days of it actually becoming available. So this is a really cool credit line up to $1 million, low interest rate, used for Amazon sellers. They want you to use it to buy the inventory that you're putting in your Amazon store. So if you have an Amazon store, if you're selling on Amazon, which, let's be honest, that's a great time to be selling on Amazon. This is a phenomenal credit line product that I think can work really, really well for you. And Bodacious says, thanks for always giving great insight. Thanks, Bodacious, for tuning in on YouTube. And Goldman uses Amazon data to determine approval. This is interesting, so you have to keep in mind, if you approve them, or if you give them the ability, permission to share your data, they're going to put the offer in Seller Central, and they're going to say, you want to apply? If you say, yes, I want to apply, you're agreeing to give Goldman that data from Amazon so they can make the approval decision. Now, Goldman says they're not going to give out or sell that information to anybody, but Goldman's going to use it to make more of a play into Main Street Financial. That's what they want to do. They want to be able to help more small business owners get money, and they're basically really geeked because they're going to use all this Amazon data of all these businesses that they're going to be able to give these credit lines to, and then use that data to be able to better serve Main Street businesses. So I think it's an exciting time. I think this gives Goldman an opportunity to offer more revolving lines of credit and credit cards for all of us. So let's talk about Amazon's working capital loans, because a lot of people don't even know this, but Amazon offers working capital loans and has for quite some time from Bank of America. And I don't know, I've seen crazy figures, but I can tell you it's over $1 billion has been lent using this program. So this is something you need to consider. Loans from $1,000 to $750,000, again, based on how long you've been selling on Amazon, how much you're selling on Amazon, backed by Bank of America. And if your business is eligible, again, you're going to see this option in Seller Central on Amazon. And again, you can get access to that money within about 5 days. So Amazon has two unique programs for their sellers. Bank of America loan they've got, okay, and then they've got the new Goldman Sachs credit line, or the Marcus credit line. So those are two unique products for Amazon for those people that are selling on Amazon. And Skip's tuning in and says, I do have that Amazon card. I have Amazon, Sam's Club, Costco, Home Depot, Lowe's, and many more. Purchases can be for any reason. It does not need to be for your business. You just have to pay on time. So some really good feedback from Skip, who's used our system to obtain, like I said, hundreds of thousands of dollars in business credit so far. So Kickfurther. I love Kickfurther. I love them. I had Kickfurther on my podcast. I think it's how I first met these guys. And these guys are fantastic. They have one of the most creative programs I've ever seen for e-commerce businesses. If you're new to e-commerce, not for you. But once you get a little established with e-commerce, this could be the way to go to finance your inventory. So this is where you can finance your inventory purchases with crowdfunding. They actually use crowdfunding to fund the actual purchase of inventory. Super cool. Okay. So what happens is, let's look at crowdfunding in general. Crowdfunding brings backers. They're called backers, the people that are giving the money. And then it has borrowers. And a crowdfunding platform like Kickfurther just brings the two together. They're a platform that merges the two together. So if we think about a Kickstarter brings their backers with money and people that want to get money together. They're a platform that brings them together. That's what Kickfurther does, is they bring Amazon or online e-commerce sellers together with backers who want to back those Amazon, Shopify, et cetera, sellers. So customers buy through what's called a consignment opportunities. Customers own the products they help fund until they're sold by the brand. Okay, and as soon as the products sell, the customer earns payment. So here's how this works. So they use crowdfunding, and you can be approved within minutes. I mean, this almost always happens within an hour with Kickfurther. And you can go to creditsuite.com/Kickfurther to get our special link for them. We have a special deal that can help you, I think, with that route. So it's creditsuite.com/Kickfurther. So you go, and I'll tell you the requirements before you go. But you can go and then you apply. They approve you within, let's say they approve you within minutes, less than an hour. You get funding within an hour for your project. So let's say I'm an Amazon seller and I'm selling phone cases on Amazon, right? Selling cool phone cases. So I can go in and use the fundraising here from Kickfurther. They go to their crowd of backers. Those backers back my project. They give me the money. I go buy my cases that I'm going to sell. I then take the cases and I start selling them on Amazon. And as I sell my cases, I pay back Kickfurther. Super cool. You don't even need money for inventory. You're using crowdfunding for inventory. You go buy the inventory, then you come in and you sell the inventory and pay back what you actually borrowed when the inventory sold. I think it's just this is such a cool way to do it. And you can go to kickfurther.com or creditsuite.com/kickfurther to be able to get approved. But again, a really creative way to be able to get money here where you're able to use crowdfunding to buy the inventory you need. Now, here's what they want to see. Pretty basic, that you've sold $150,000 on e-commerce before. That's it. Again, for people starting off, this isn't out for you. But if you're selling on Amazon, and you've already sold $150,000 plus on Amazon, they want to see a history of people that actually know how to sell on Amazon. Excuse me, I keep saying Amazon, but it doesn't have to be Amazon. It could be anywhere online. If you're an e-commerce entrepreneur and you're selling, you've sold over 150 grand, Kickfurther is a great option. Now, if you say, man, I haven't sold anything yet, or I've only sold 20 grand, don't write this off. Keep this mentally, write this down, creditsuite.com/Kickfurther. Come back to this because it's one of the most creative and best ways I've seen to be able to finance inventory as an e-commerce entrepreneur. You just need to have a track history of about $150,000 in sales that you made. Shopify Capital, they offer financing specifically as well. 12-month term, payback with a percentage of your day of your sales. So as you sell, you pay them back that way. Borrow between $200 to $1 million, and the total owned and daily repayment rate depend on risk profile. Okay. So the daily repayment rate, let's talk about that. How much you have to pay back daily is what we're talking about. So when you borrow X amount of dollars, how much they want you to give back daily out of your sales depends on risk. Okay. And for more information, go to help.shopify.com. Long link. If you're watching on YouTube, Facebook, Periscope, you could see it. Just take a quick screenshot. But help.shopify.com. It's called Shopify Capital. And obviously, specific financing for those that are selling on Shopify. PayPal and Square, some of my personal favorites. Loans up to $500,000. Approval based on processing volume, what you're processing through PayPal and Square. There's a reason I mention these on this because a lot of people that are e-commerce sellers are processing payments through PayPal. It's just the way that it is. And so this is what I love is that if you're selling on Shopify, I just gave you a way to get a Shopify credit line through Shopify Capital. But then you're accepting payments through PayPal. Now that opens up financing through PayPal. It's almost like a double hit. Your same sales can help you get two forms of money. It can help you get money from the platform you're selling it on, Amazon, Shopify, and the examples I just gave you, financing options. Then the money, the person that's processing your payments, PayPal and Square, you can get money from them as well. So the same sales you're making, there's multiple different ways to get money from the platform you're selling on and where you're actually processing your payments. Now, PayPal and Square, here's a quote. Your business's eligibility and loan offers are based on an overall assessment of your business's health. The lender evaluates, and what they mean by business's health in large part means how much are you selling? How many things are you selling? How long have you been selling? It's really your history with PayPal and or Square. The lender evaluates the credit history of the business owner and the business to determine approvability, the loan amount, and pricing, and that comes from PayPal. There's a reason I showed you this quote. Because even PayPal loans, which are super simple to get, are pulling your business credit. They even tell you right there, we look at the credit history of the business owner and the business. So they're looking at your business credit. This is why building business credit is so important because it improves your fundability. And your fundability is what lenders and credit issuers look at to determine if you should be approved. So if you don't have any business credit history, you're not going to be approved for as much money or as better terms as you could if you had business credit, Bill. And I just can't say this enough. Almost every kind of money you try to go apply and get takes into account your business credit history. If it's not there, maybe you'll get approved. But if you don't like the interest rates or the amounts you're getting approved for, your business credit's a huge factor. It's one of the reasons that you want to make sure you get that addressed. Now, they have one fee. It's not like they charge interest. They have a one set fee. Both PayPal and Square have one set fee they charge you. It could be as low as $500 based on the amount of the loan, the repayment percentage you select, and the history. And this is why this is unique. So I want to talk about this. The repayment percentage you select, you can select how much of the credit line you're going to pay back or loan you're going to pay back in a certain period of time. So the faster you choose to pay them back, then the lower the risk to them and the lower the lower the fee is going to be. If you want more time to pay back the loan or credit line, the higher the fee is going to be. So knowing that that fee is based on the repayment percentage you choose, because they're going to ask you what percentage do you want to pay back, that's going to decide what that fee is. And you can get funding in as little as 24 hours based on your funding in your PayPal and Square account. And 5 to 10% of the loan needs to be paid back every 90 days. So we talked about how your fee's based on how much you pay back. Now you know the minimum requirement of how much actually needs to be paid back in what particular period of time. So things to consider. Now, merchant cash advances on revenue lending, I'm not going to talk about them today, but it's another way. If you're processing credit cards and you don't have money going through PayPal and Square, they're going through Visa, MasterCard, Amex into a merchant account, you can use that merchant account as leverage to get money as well. Interest rates can range from 8 to 50% depending on risk, and you can typically get approved for as much as 12% of whatever amount you generate in sales annually. So whatever your annual sales are, you can get 12% using your credit cards as collateral, using those credit card transactions. So even if you're not running money through PayPal and Square, some other options that can help you there too for e-commerce entrepreneurs. So Ondeck, speaking of that, they offer inventory loans and business lines of credit. Term loans run $5,000 to $250,000 with 12-month terms, paid back daily or weekly. Lines of credit run from $6,000 to $100,000, paid back over 12 months with automatic weekly payments. So Ondeck is one of those that I just mentioned. They do cash flow financing. They do revenue and financing. They do merchant cash advances. Now, warning, post-COVID-19, pre-COVID-19, this was the number one most popular funding product that existed in the business funding space. Post-COVID-19, this product almost stopped across the board. Almost all lenders stopped lending it. And the reason for it is because, as you can imagine, it's based on consistent revenue, and everybody's revenue stopped immediately overnight in a lot of businesses. So this industry is readjusting to what's going on now, but it's still a good way to go. And Ondeck is the biggest lender in this space, so somebody to pursue with them as well. Our credit line hybrid program, talk about this a lot. And to make it easy, the way that it works is that you're getting unsecured credit lines up to $150,000. You don't need to have collateral. You don't need to have cash flow. You can get it as a startup. It's based completely on your personal credit history. So if you have good personal credit score, 680 higher, you can get approved. You can use a guarantor as well to get approved for this program. You can get 0% for up to 18 months. You can get cards that report to the business credit reporting agencies, so you could build business credit at the exact same time. You get multiple credit lines to help create competition between them. So in about 6 months' time, they'll all start raising your limits as well. You can usually get about 5 to 8 times the amount of money you get on your own if you try to go apply for a credit card. By the way, don't even think about applying for a credit card right now. If you're interested in doing so, get in touch with us by our link below, creditsuite.com/get funding, or give us a call, 877-600-2487. Almost all credit cards are getting turned down right now. But if you have unique relationships with the underwriters, as the financial sources that offer this product do, then you can get in a back door and get approved. But if you waste your inquiry by applying, it's really way tougher to be able to get approved for. So some insight on applying for credit cards right now. And again, no financing on your, no impact on your personal credit if it's reporting on your business credit reports as it oftentimes can. And you could take the cash out of this credit as well. So you're able to actually take the physical cash out and do so at 0%. And then never forget about business credit. Business credit should always be a goal that you're building business credit, because it's your fundability. It's what controls your ability to get all other kinds of money. And let's be honest, it gets you $10,000, $20,000, $30,000 credit lines at the same time as well. Apologize. I think I have a German Shepherd going crazy in my background here. So this is credit without a guarantee, without a personal credit check. You can get it immediately. You can get it even as a startup business. You don't need collateral. You don't need cash flow. You don't need good personal credit. I try to include this and talk about it a lot because it's a catch-all. Everybody can get this. I've talked about stuff today that you need $150,000 in sales to get. I've talked about stuff that you need $500,000 in inventory to get, or you need a PayPal account to get, or you need to be selling on Shopify to get. This is something anybody can get. I don't care about your credit quality. I don't care if you're just starting a business. I don't care if you have collateral or you don't. Everybody can get this. And 80% of what you need to fund in your business, you can get from business credit. So it's definitely something that you want to consider now or in the future, because it's going to tie into your ability to get other kind of money. It's one of the most valuable assets that you really own. So due to current circumstances, online business is doing really well, a lot of them. Okay, inventory financing, a lot of different ways we've talked about today, getting financing using existing inventory, going to creditsuite.com/Kickfurther and using crowdfunding to get your inventory. Okay, so we talked about multiple different ways to do that. We've also talked about using personal and business assets, 401ks, IRAs, stocks, bonds, account receivables, et cetera, that I think can work for you. We've talked about Amazon options, a loan, a credit line with Amazon. We've talked about options with Shopify as well, and the Kickfurther. And we've also even came in and we talked about some merchant financing, merchant cash advances, revenue, PayPal loans, Square loans, all really practical for e-commerce. And we talked about Credit Line Hybrid, our #1 most popular program right now, where you can get up to 150,000 credit lines and take the cash out. And then, of course, don't ever forget about business credit, because you can get business credit even when you can't get any other kind of money. Okay, and it really helps get you high limit credit lines for about everything you need. That Amazon corporate credit card we talked about, amongst many others. If you need help with financing, then give us a ring, 877-600-2487. We work with every legitimate kind of financing, and what we do is we'll help kind of assess where you are and then help you get placed with the right lender or broker, whatever it may be. We help you find the right source that will help you get approved. We never charge you fees for that. It's a free service because we want to help you get the capital you need. Don't get me wrong, lenders are going to charge their interest and fees, but we even negotiate to get that low for you. And our goal is that you never need to look for money again. You could just get in touch with us, let us help guide you to the appropriate source. And then that way, whenever you need help, you can have one person you can call and we're there to help you. So hopefully you got a lot of value from this. If so, do me a favor, give me a like, give me a love. Somebody was angry. Somebody gave me an angry. For some reason, I got an angry. Oh, Skip. Why, Skip? Why would you give me an angry? It even tells me who gave me angries. So give me a like, give me a love. This is cool. I love this. I can even see who's liked and loved. So look, guys, we do a lot of work to come up with the content, to be able to do all this research and then be able to deliver it. All I ever ask is give me a like if you got value from this. Give me a share. Go ahead and subscribe so you're notified whenever we go live, and we'll continue to deliver this kind of content. Speaking of going live, we go live on Facebook, Periscope, and YouTube Tuesday and Thursday at 1 and Wednesday at 11 o'clock, all Eastern time. So tune in. We've got a lot of other cool things that we'll be diving into. Even tomorrow, you can check our Facebook schedule. You can check online on YouTube and Facebook. We schedule in advance so you know what's up and coming for tomorrow as well. And if you like what you see, then go to Instagram. Follow us on Instagram. Follow us on Twitter. We have daily tips there. We have over 300 plus videos on YouTube, probably over 400 now, that you can get all kinds of information. We have a great podcast called the Business Credit Financing Show that you can listen on the go. We're nearing 350,000 downloads on that podcast. So very popular, where while you're in the car, you can listen to industry experts teach you all kinds of cool things. And you also get a lot of information about business credit financing. So don't forget to listen as you go. Slick says, I will call you. Awesome. I appreciate that, Slick. Thank you. And Bodacious says, I need help with finance. Give us a ring. Bodacious, and our number is 877-600-2487. Give us a ring. If you're not a phone person, send us an email, info@creditsuite.com. And we will look forward to talking to you. So anything we can do to help you get money, please like, please subscribe, and give us a call and let us know what we can do in our world to help you get money, including building business credit for your EIN that's not linked to your personal social. Thanks, everybody. Have a great day.